Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Graeme O'Neill. He's the president and CEO of Bayhorse Silver. It's listed on the Toronto Venture Exchange, symbol BHS, and online at bayhorsesilver.com. Graeme, welcome to This Week in Money.
Well, thank you very much. It's good to be here.
The Venture Exchange has put out a white paper looking for input to improve the junior capital markets in Canada. You responded with a public letter to the president of the exchange that's gone viral, and you just did an interview about that with Business in Vancouver. First off, why are the entrepreneurs the most important people in the junior markets?
Well, it's not just the junior markets. The entrepreneurs are the most important people in the markets, period. They're the ones that got the drive and the energy to take the risks and to put their own money into creating ventures and employing people. The junior market specifically, we employ a lot of people. Well, at least we did up until the last few years. And so it's very important that, the entrepreneurs are supported because they provide the backbone to the economy, contrary to majority opinion where it's the little guys. Entrepreneurs create businesses that create jobs.
Can you tell us about the Uptick rule, who can bring it back, and how it can help?
Well, that's an interesting issue. The Uptick rule was in place, and it caused a sort of a circuit breaker to hold back mass shorting. And what happened when the regulators and the politicians got involved and said we want more competition in exchanges in the Canadian marketplace, they found one of the unfortunate problems with it was that there was no longer efficient price discovery. So the Uptick rule was essentially if a share was trading at a specific price, you couldn't sell it unless it traded up. So because you can't get efficient price discovery, it was causing all kinds of problems. When can you uptick and when can you short? So they just said, we're just going to move it and get rid of it. So now what can happen if someone wants to short, they can just short a stock down to zero. And it's not a good situation, frankly.
In other words, trade a company right out of existence.
They can do that. Now, the regulators are the ones that cause the problem, regulators and the politicians. And with computer trading, I don't see any reason why it can't stay. I mean, if we can get a spaceship to outer space, out to Pluto, and we can guide it around Pluto and take great photos, all with the help of computers, why can't we do a simple thing like on Earth to put a small uptick rule back in place?
We've heard the argument the Uptick rule can't be brought back due to the existence of multiple trading platforms. Do you really buy that argument?
No, I don't. As I said, you can do anything with computers these days. There should be no reason why it can't be done. And they caused the problem, the regulators and the politicians. Let them fix it. It's their problem, but they've made it our problem.
Germany banned shorting. Was that a good move?
I believe it was.
Is shorting good or bad for the junior markets?
Well, the exchange has put out this white paper, and they've made a big thing about all the participants, entrepreneurs, and everyone else. So when you form a public company, there's an enormous amount of people they support. We support lawyers. We support accountants. We support regulators. Not that we want to support regulators, but they're in a position where they benefit from what we do. So if you put a loaded gun in someone's hand and says, don't fire it, and they do, you can kill a company. And we just see that with shorting, there's too much room for abuse. I mean, Bayhorse has had some shorting in the past. I don't believe we've got any shorts at the moment, but we don't really know because it's very difficult to find out. So I think it's bad for the junior markets. The whole reason for the junior markets is to build and grow companies. So if you're already going to put them out on the gangplank and give them a quick prod to put them in the water, why bring them to the markets in the first place?
Well, it appears there's no longer a level playing field. What happened?
Well, now that's a regulatory issue. IROC is the major regulator in the markets these days, especially for the brokerage houses and the banks, et cetera, and so forth that are playing around in the markets. And they're the ones that are actually causing a lot of problems with their regulations. For example, I've had numerous brokers call me and say, well, Graeme, we can't go and buy Bayhorse Silver because we get too much hassle from the back office because you're a small junior company with, not too much liquidity. And they say the IROC actually comes in and says, well, this is not an appropriate investment for these people. Well, it seems to me that under the Canada Rights and Freedoms, there'd be an argument to say that IROC has got no place in telling a person what he can or cannot invest in. In fact, I heard at one stage, and this is solely hearsay, that an IROC regulator said to a broker that, well, that's not an appropriate investment for this gentleman who just happened to be a billionaire. And he was brought to earth in a, very short order for saying that a billionaire doesn't know anything about, investing and shouldn't invest in a junior company. So the regulators, I think, got a lot of issues that they've put in place that has taken the playing field for investors away from being level. There's some other issues there as well, and this goes back to price transparencies. Because you've got so many now platforms trading in the Canadian market, the same shares, and I think there's 10 or 11, it's mind-boggling, you can't find out what pricing is. And I've had numerous brokers say to me, Graeme, I can't find your price because it's trading on so many different platforms or priced on so many different platforms. So I think market transparency is really important. And again, with computers, you should be able to make that right front and center. Here's all the trades. This is where it is. This is what the various platforms are quoting it at, and it should be readily available.
Well, if the government is so concerned about people losing money in a junior market investment, how come they don't have people guarding the doors of casinos asking, can you afford to lose that money?
You gotta have me laughing there. But it's not only that. They talk about the junior markets and the risks there. I would argue that probably the New York Stock Exchange is the biggest gamble in the world and the biggest scam in the world, literally because of the billions of dollars that have been lost there over the years. And these are the big market players. So, you can't compare the losses that are being made on the junior exchanges to the massive losses that are hit on the larger exchanges. But the problem that exists, again, is overregulation. If there's no risk, there will be no reward. The greater the risk, the greater reward. If investors don't want to take risks, the banks are quite willing to put their money in to deposits, give them a minor little bit of interest, and watch it fade away as inflation goes. But that's a discussion for another time, frankly. It's just that the more risk, the more reward. And people have to know you cannot regulate risk, no matter what you do.
What are predatory and manipulative trading practices in the junior markets?
Well, that's kind of an interesting one. The regulators put out an explanation of what predatory and manipulative trading practices are, and I've read them through, and frankly, they're allowing things to go on that are legal and I consider manipulative. Such as there's one company out there or one group of people that constantly trade shares in the junior markets, and it probably goes on in the senior markets as well. But the minimum board lot is 1,000 shares, so they sell 1,000 shares in a very, very, very slim market, very illiquid market, and it may cause the stock to go down 2 cents, and that may be 20%. So, I've often wondered how they're able to do that. Well, they do such an enormous volume of shares that it appears they get a break. So 1,000 shares at 3 cents is $30, but it only costs them $1 to do the trade. And it seems to me that the venture exchange has 0.003 cents, so it should theoretically cost $3. So someone's getting a break somewhere, and if they're not shorting it, if they're buying small lots at very, very minor prices and then selling it at a profit, I mean, it's totally legal. But 1,000 share trade, when there's nothing else happening, that's manipulative, in my point of view.
Where are the regulators on that?
Well, we've complained to the regulators many, many times, and they essentially have said there's nothing they can do about it. If it's legal, there's nothing they can do. So it comes down to what is a manipulative trade. They've got their definition, and that's really where it sits.
So is this a case of the regulators have bitten off more than they can chew, or have they just unintendedly made things more complicated than they need to be?
Well, I certainly think that it's the law of unintended consequences. I don't think it was properly thought through when they decided they want more competition. They didn't clearly understand at the time that this issue would come up because you've got a different number of exchanges that are trading the shares. I'm quite sure that they never thought about the Uptick rule, and then they figured that we've got a problem here. So rather than fix it, which would probably cost money and computer time, they just chose to ignore it and we'll get rid of it. So, it's their problem, but they've placed it on us, so it's become our problem, and it's affecting us.
Well, we keep hearing that they're deliberately over-regulating the junior market to kill it so that people are forced to go to the big banks and their trading companies.
Well, I think people like IROC and that, they're, they answer to the market participants, and they've extended a lot of their regulatory reach to the junior markets, to the companies themselves. As an example, they require us to submit every news release for regulatory purposes before we can put it out into the market. So they're interfering with the boardroom. But as far as a conspiracy theory goes, I've heard it. I don't necessarily believe in conspiracy theories, but I think there's economic warfare going out there between the banks and as the major participants in wanting to get rid of the smaller independent investment dealers. And that's a predatory practice in my view, but it's not necessarily a conspiracy. It's something that everyone wants to get bigger. Everyone wants to corner the resource, which in this case is money. And I think in their opinion, the general good is, whatever's best for the large guy, because they're always trying to squeeze the little guy out. But it's not good for the capital markets, especially the junior markets, because the banks do not support small business, even though they say they do. You go to the bank and you try to get a loan, they'll look at you and say, unless we get your house, your car, and your wife, and, we're not going to give you any money, but here's the umbrella if you give us those things. And the moment they see a little bit of rain on the horizon, they want the umbrella back. I mean, that's just how the banks are. Now, there's some other issues there that no one ever gets to, and we've now got bail-ins as practice in Canada. So even if you put your money in the bank, there's no guarantee you're going to get it back because it's a loan to the bank. Everyone thinks it is theirs. No, it's not. And then you have things like hypothecation and rehypothecation. In fact, just even in opening up a brokerage account, you read the fine print. You go to hypothecation and you go, oh, what's that? Well, that's a subject on in itself, but essentially it says if the guy you're dealing with and you've written the agreement with owes money to someone else, your account, if you owe money to the broker, is then hypothecated through to the next guy up the line. So it gets to be a pretty nefarious sort of state of affairs that not a lot of people know about.
Vancouver is, or was, the junior mining capital of the world. Is it time for a new exchange to be located in Vancouver that understands the junior mining industry?
Well, I said to a couple of other company presidents the other day that the venture exchange and the TSX exchange is majority owned by banks. So, it's got a lot of other shareholders, smaller shareholders, but so it seems to me you've got a conflict of interest. You've got the big financial institutions owning an exchange, which is a for-profit organization, and we're the clients. The thing I said to a couple of other CEOs was maybe all the public companies should trade on their own exchange. They should own the shares in it. And so there was a few raised eyebrows, I must admit, but it's certainly a thing to think about. If we're held to high standards by the regulators and we're drained of money by the not just the regulators but by the exchange, maybe that is not a good place to be.
Changing board lots. What are board lots and how can they help?
Well, the reason I mentioned changing board lots is because of this 1,000-share downtick, which is very, very common with majority of the junior companies trading on the venture exchange, and it also probably happens on the TSX as well. Essentially, it just says that if you go under $1 a board lot, it's 1,000 shares, and it trades that way. So it's the minimum trade you can make, 1,000 shares. But when you're down at 1 or 2 cents, 1,000 shares is nothing. $10, 10 cents, it's $100. So there was a time when $100 was a lot of money, and most people can remember that. You go and get a Starbucks and it cost you $1.50, $2. Now it's $3, $4. So $100 doesn't go as far anymore, and it's the same with the when you're purchasing shares, buying or selling. Maybe it should be $1,000, no matter what. So if you're or $500 minimum trade, and you adjust the board lot to reflect that minimum trade. So rather than having a board lot as a number of shares, you have it as the dollar figure. So every share that trades under 10 cents, for example, you have to do a minimum $500 trade, which is 4,000 shares or whatever the amount is on that amount under 10 cents.
We used to have dozens and dozens of independent investment houses. Most of them have now disappeared. We're down to a handful. Could they return if the regulatory environment improves?
Well, that's part of the economic warfare going on out there between the large financial institutions and the small ones. There's so much regulatory stuff going on out there right now that the cost of the back end of the brokerage houses is enormous. The larger organizations, such as the banks, they can afford it. It's pennies on their income. But if you've got a whole bunch of regulations that have to happen and you need oversight on them, then there's more risk to the brokerage house. So and they can't keep these costs in line. So the regulatory people are imposing these costs which are disproportionate to the incomes of the smaller houses. So they've been merging not only to fight the economic battle with the larger companies, the banks, but also to reduce the regulatory burden. I don't know personally whether they would be able to grow up again in a different environment. But I'm certainly sure in my mind that the regulators are a big part of causing this problem.
Is it true when the junior markets are running right in Canada, we get to see a lot more investment and jobs in the country?
Oh, absolutely. For example, Bayhorse Silver. We have a number of consultants, 4 of them are PhDs. So we can't employ them on a permanent basis because we're not big enough yet. So they are also employed by other companies. We have accountants. We have one accountant pretty much full-time, does all our accounting, all our financials. But we also engage our auditor. That's a significant charge every year. We have lawyers. We have people that are on the phones talking all the time. You can only stretch yourself so thin. Secretaries, there's an enormous number of jobs that we provide. I look at Vancouver right now and the city, and I look at the number of office spaces that are going empty, and it was running as probably $100,000 a year of shareholders' money to have an office downtown, and it's actually fairly critical to have an office where you're also mixed in with a lot of other people, so you can get feedback from them. You see them, you talk to them. But I looked down at the coffee shop underneath where my office used to be, and it's nowhere near it was. I mean, the people going through it are much less. So we've hollowed out. A lot of us are cut down on costs, but a lot of us have moved out of Vancouver Center City proper into less expensive accommodations, and that means that money is not going into the economy in Vancouver. It's just being pulled out of it. Everyone's hurting.
Does the TXX venture have the power to make the changes you've suggested, or is it up to IROC to make those changes?
No, the exchange is actually the facilitator of making trades happen and ensuring that, of course, they make a profit. The regulatory environment, it's up to IROC. IROC is responsible for whether a company shorts or an exchange shorts or doesn't short. And in fact, I think shorting is actually out of control of the exchange. That happens at the brokerage, happens in the banks. So, but yes, I believe the venture exchange should be a vocal proponent of making these things happen, making these changes. We do need a level playing field, and unfortunately, everyone thinks that us entrepreneurs are, as a lot of people think, or shall I say, less than honest with the markets. But that's not the case at all. Majority of people, in fact, I don't know of anyone who's out to fleece investors. We're all trying to create wealth for our shareholders and look after our shareholders. And if we create wealth for ourselves at the same time, it's because we've done a good job for our shareholders. Mm-hmm. So, in my mind, that the regulators have gone overboard trying to regulate risk away from the markets, and you can't regulate risk. If
you got to be in charge of the junior markets for a day, would you bring back the Uptick rule or ban shorting?
Oh, absolutely. Without a doubt. It comes down to psychology. There's a lot of people, rightly or wrongly, think that they're getting robbed, stolen from in the junior markets. They're actually getting robbed, stolen from in the senior markets too. But it's not the entrepreneurs, and it's not the shareholders themselves. There is a what I call a parasitical element, and they believe it's their right to take money on both sides, and they provide nothing, in my opinion, to the benefit of the market. They may provide liquidity, but liquidity at that price, no, I don't want it. I'd rather see shorting banned completely.
Can you tell us more about Bayhorse Silver?
Well, Bayhorse Silver is on the Venture Exchange. Obviously, the symbol is BHS. We have a website, which is bayhorsesilver.com. And our main projects are a small silver mine down in Oregon. It used to be a past producer. It was producing at 17 to 20 ounces a ton. And that's significant when you think that just recently reports coming out that the primary silver producers are now producing around 7.5 ounces a ton. So we're looking at 2.5 times the average grade from primary silver producers. And we're allowed to take up to 15,000 tons off the property every year without any further permitting. So with the advent of ore sorting and dense media and the advances made in it, we believe we can take the grades up substantially higher than what we currently have, which is a historical estimate. But those numbers were good enough to mine in '84 when the price of silver was up much higher than it is today. And without the ore sorting, they were marginal. But with ore sorting, you can take up to 5, 6, 7 times the grade without having to put it through a significant milling process, crushing process. And you eliminate a lot of the waste material before you truck it, so you're trucking higher grades. And we've just taken on a major project, again, silver, lead, zinc, up in the Silver Valley. Now there's well over 1 billion 4 ounces of silver being produced in the Silver Valley. It's the second most significant producer of silver in the world. Heckler's Lucky Friday has been mining there for years. Wouldn't even like to think how long.
And the second property is, Graeme?
The second property is we call it Bridging the Gap. It's actually the old Government Gulch property on the Silver Valley, and it sits between the Bunker Hill and the Page mines, just outside of Kellogg, Idaho, in Smelterville, in fact. There's an airport right across the freeway from it. Golf course is, in actual fact, only about half a mile away. Right off I-90 in the Silver Valley. It belonged to ASARCO, and they stopped mining it during the EPA Superfund cleanup of the Silver Valley, and it's just recently come available. So because we're focusing on silver, and because, again, it's patented ground, it had 5 silver mines on it, we thought it was just an absolute fit along with our Bayhorse Silver mine. And again, both properties on patented ground. We can go mining straight away, or we can go exploring straight away, and we don't have to go through the immense expense and time-consuming process of permitting to do this. We can, in actual fact, put a drill project going right now if we wanted to, and no recourse to permitting, etc., and so forth. So the average grade that was mined there was over 10 ounces a ton, along with 10% lead and about 3% zinc, I think it was. It was a highly profitable mine, but ASARCO owned a number of mines in the valley, and as the various commodity prices would move up and down, they would move between the mines. So it's got an enormous prospect, and we're really, really pleased with it.
Graeme, thanks a lot for chatting with us.
Well, thank you very much for having me on. I hope I've managed to bring some light to the subject. It's never an easy thing talking about any company and market conditions like this, especially when the regulatory environment creates more difficulty for everyone. But I'm pleased to have been here, and thank you very much.
My guest has been Graeme O'Neill, President and CEO of Bayhorse Silver. His website, bayhorsesilver.com. And that wraps up our show for this week. Comments or questions for the show can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.